Hey everyone, this is Ayman and today we're going to be talking about 8 rules if you master you do not have to work again. Catch title, I know that, and I know that it's not that simple, but these 8 rules will help you progress faster. So let's dive into them and let's go to rule number 1. Rule number 1 is news. And to be honest, news are not that important, but you need to be aware of them. First of all, why are they not important? They're not important because no matter how good the news are, and no matter how bad the news are, it doesn't mean that the stock is going to go up or the stock is going to go to the downside, right? Some kind of news you need to be aware of. For example, the Fed talk, FOMC. In Fed talks, market behaves slightly differently. And I bet that if you paid attention to the last FOMC talks, you could notice that between 9:30 a.m. at least till 2 p.m. while these news come out, market doesn't move a lot. It kind of moves sideways. It's slow. It's choppy. People don't know where the market is going to go to. And maybe in some kind of periods, you need to stay out. You need to trade carefully. Getting back to news, the catalyst, sometimes it is important. When is it important? It is important if you are a longer term trader, a swing trader, for example, or maybe if you're planning your day trade and then based on your entry intraday, you plan to swing your position. This is also where news could be important. Rule number 2, look at the bigger picture. Paying attention to bigger picture is really important when day trading. You need to at least understand the overall direction of the market. And so that I don't dive deep into it, let me just show you this. Take a look at this chart to the left of me. You could see mRNA, market opens and the stock is strong, or at least you think that it's strong because it is uptrending. You wait for a setup and you want to play it to the long side. You get into it and then suddenly what happens? It dumps. Why is that? I mean, it could be just the random behavior that the market has because the market trades randomly. But if you paid attention to the bigger picture, you could see that the stock was selling off overall. And this strong move at the open was just simply a pullback for that strong move. And knowing that and looking at the bigger picture overall, you could have anticipated that this is just a pullback and the more likely direction is for the stock to dump down today. Me seeing that and knowing that the stock could actually sell off, I was looking for a short play, and this is exactly how I executed the trade. So take a look at the bigger picture, understand the overall market behavior, and try to play along with the direction of the trend. Rule number 3, find levels. Levels are really important when day trading, and honestly, a lot of people are struggling finding the right levels. People would look at the daily chart and they would mark everything that is above you and everything that is below you, but you do not really need to go for levels that are way far away from the current price. Why is that? Because the market will not reach it. Check the average true range, and we'll get to this point in a bit, and try to find levels within the range that the stock could actually reach. And to find more accurate levels, I would recommend using the 60-minute chart, because the 60-minute chart shows you actually, not necessarily the 60-minute chart, you could use the 30-minute chart, you could use the 15-minute chart, zoom it out, and that could show you the most recent levels. And what you care about when you're trading is the most recent levels. If there is no recent levels closer to the current price action, then yeah, maybe you might want to zoom the price out and try to find something older. But if there are levels which are recent, pick those, and that's all you need. You do not need to find levels based on the daily chart that are far from the current price action. Rule number 4, find setups based on smaller time frames. And what setups can you trade? You could trade an opinion range breakout, opinion range breakdown, bull flag, bear flag, head and shoulder. I mean, there are a lot of setups. Not necessarily these setups, you could also use volume price analysis. No matter what you are using, remember that you want to use it along with the bigger time frame. You do not want to trade a bull flag to the long side when the market is overall selling off. It's less likely to work this way. Find a setup that is supporting your analysis based on the bigger time frames and trade exactly that. Next rule, learn reading the average true range. Honestly, I don't know why, but a lot of traders, they do not use the average true range. The average true range is such an accurate indicator no matter what time frame you're using it at. The average true range shows you the average size of the candle. It shows you the average move the stock could make based on the time frame that you're looking at. Personally, for me, what I do is I'm looking at the average true range based on the daily chart, and I try to understand how much the stock can run today based on the daily chart. Then I find my setup based on a smaller time frame, which is the 1-minute chart or the 5-minute chart, and I know how much the stock could run today. And remember, it's an average. If the average true range is $3, it means that it could run on average $3, more or less. So I would target somewhere around $2.50 just to be safe. If you are a scalper, you could watch the average to range on the 5-minute chart, and you could understand how much the stock could run based on the 5-minute chart, set your stop loss based according to the average to range in the 1-minute chart, and hold it, for example, for a move based on average to range on the 5-minute chart. And you could do that on any different time frame. If you are a swing trader, you could target the average to range on the weekly chart. And by the way, one of the simplest strategies for swing trading is waiting for the stock to dump into the 50 moving average, 50 SMA or 200 SMA, buy it at that 200 SMA on the daily chart, and set stop loss a daily ATR below it. This is one of the simplest strategies. It isn't effective. If you want me to make a video on how you can swing trade using the average through range and using bigger moving averages, type down in the comment below, and maybe that would be the title for the next video. But what I would really encourage you to do is watch the previous video I made on how to read the average through range. I'll post the link down below in the comment section. Take a look at it. It will help you a lot, and trust me, no matter what time frame you're trading at, it could be really helpful. Now, rule number 6 and rule number 7. Know when not to trade and add into your winning position. First of all, know when not to trade. A lot of people, they're so eager to trade. They think that the market is full of opportunities. We could go to the long, we could go to the short, we could find a setup, we could make 5 hours, we could make 10 hours. At the same time, we could lose a lot, right? But why shouldn't I trade today? How the hell would I know if the market today is going to be choppy? I agree with that. I mean, in some way, if you do not pay attention to the bigger time frame, if you do not understand the structure of the market, if you do not read the daily chart, or at least understand what phase we are at, it would be difficult for you. But if you go back to the previous rule when I said utilize the bigger time frames in your favor, it could be easier for you. You will see that the daily chart is just in a chop. You're having a green candle after a red candle, after a green candle, a doji, after a reverse hammer. And that will tell you that there is no clear direction to the market. And especially if you are a trend trader or a trader that is told at least for 30 minutes to their position, that would be a difficult day to trade in this particular time frame. So utilizing bigger time frames could help you understand which periods of the market you want to stay away from and which times you want to be aggressive at. Next rule is adding into a winning position. Adding into a winning position is really important. Why is that? Think of it from this way. Do you know the 98% rule? The 98% rule is basically a rule where you average down into your position, and when the stock goes back to your break-even or slightly higher, you exit at profit. And by the way, this is a strategy, and it works a lot of times, and I know traders that are using it, and actually traders that are teaching it. Because think of it this way. If you average down, but in a smart way, price drops down against you, key level, average into your position. Broke that level, went lower, averaged into your position, hopefully bounced, went in your favor, and you exited. And this would be working so many times until you average on every single key level, you are out of buying power, and that one single trade would just blow up your account. Now reverse this. What if you exit, or what if you bail on your position every single time the stock hits your stop loss, but try to catch that one single position where you add and add and add and add until it hits your profit target after you are out of buying power. You could have the biggest win of your life. Now, I'm not telling you do that. I'm not telling you get 98 losers until you finally catch that winner. But add in a smart way. Add into positions that are allowing you to add into your position, right? If you see, for example, that you played a breakout, then you're having a bull flag and it's really clean setup that could allow you to move your stop loss to a new technical level, then do that. Add 2 times or 3 times, try to maximize your profit, because the goal is to maximize your profits and try to wipe out the multiple losers you had before. And rule number 8, plan your trade in advance and stick to it. No matter what type of trader you are, it is always better to prepare for trading in the pre-market or on the day before. And when we're saying prepare for the market, it doesn't mean just find stocks that are in play. And it doesn't mean just find stocks that you can trade after market open. When we say find stocks in play, it means analyze the stock. Try to guess the favorable direction. Find the levels that you want to play around. Find the levels that you want to play the breakout from or the reversal from. Then plan the trade, how much size you want to get into this position. Where do you want to place your stop loss at? Approximately, at least. Of course, it will depend on the setup that you find at smaller time frame, but approximately, where do I want to put my stop loss at? And if I put my stop loss right there, with what is a realistic target? And would that realistic target give me a good risk to reward? Yes or no? Plan everything in advance And once you've landed, wait for the market to open. And once the market open, all you need to do is execute your plan. If the stock does everything as predicted, get into it and manage the trade the way you planned it. If not, then unfortunately this is not the day, or maybe this is not the stock for now at least. Come back next day, or come back, play another stock that you played, and hopefully it will give you your plan. And discipline is the most difficult part around here, guys. Sticking to the plan. Planning is easy, but a lot of times, oh, it's actually dumbed down. Maybe I need to change my plan and play it to the short side. If you base your plan based on bigger time frame, you base your plan based on the overall direction of the market, it doesn't mean that you need to suddenly change it. Why is that? Because catching the timing is difficult. The stock could be long, but it would start dropping down. It doesn't mean that you need to short it. It means that maybe my idea is still correct, but the timing is wrong. I need to wait for it to come back and then play it to the long side. So this is basically it, guys. 8 rules. If you master, it could help you advance faster to reaching your goals. If you have any questions, please write them down in the comments below. If you have any suggestions for future videos, let me know. Email me at ayman@birbultraders.com. If you have any questions, follow me on Twitter at aymanbbt. Have a great day, everyone, and I'll talk to you on the next video.